Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie. Let's take a look at the midweek market update. Going to start with some ETH information, the 411, what's going on with ETH. So ETH is transitioning from proof of work to proof of stake on a consensus mechanism level. We've never seen transitions of this magnitude before, as in market cap plus ecosystem plus community. We've never seen it to this scale before. It has happened for previous coins, so it's not unique in that regard. It has happened before, but it hasn't happened with this much DeFi involvement, for example. So in order to go through these successive checkpoints of are we ready, let's test it, right? So they have all these test nets, which are just kind of sandbox playground environments where developers can deploy code or play around with the chain before it goes on mainnet. And so as we've crossed over this threshold of successive test nets, we're getting closer and closer and closer to the final day when the transition will occur. So this is Tim Byko. He's, I guess, the project lead, effectively making sure ETH hits these checkpoints. And he's saying if you run a node or a validator, which is incredibly important, this is your last chance to practice, basically, before mainnet, before this goes live. So you have a lot of different processes talking to each other here during all this, a lot of moving parts, right? Now, the ETH chain might be perfectly fine. There might be no issues. I don't expect there to be any issues. I don't think many people generally expect there to be many issues with ETH specifically. It's everything else on top of ETH where I think people aren't so sure and or haven't quite game theoried out all the possibilities. If we're talking about stable coins, if we're talking about Chainlink and oracles, and now we're adding onto this pile of stuff, contentious hard fork potentially that's almost certainly going to amount to nothing, either very quickly or very slowly over time, like many Bitcoin hard forks have. Bitcoin Diamond, Bitcoin Cash, Bitcoin SV, right? All of these Bitcoin forks really have no community, no activity, generally don't get a lot of attention, and yet they're still around, right? So that's one possibility for this ETH POW fork that's likely coming. But the other possibility is, they try it, it goes nowhere, it doesn't get listed on any exchange, and it just kind of dies on the vine before it grows into something bigger. So something else to think about, right? If you have ETH, if you have stuff on DeFi, if you've got anything going on with ETH at all during this period, just have a plan, right? If your plan is, I'm going to leave it in DeFi, I'm confident everything's going to be fine, that's fine, right? I don't care what your plan is, but make sure you have a plan so you're not panicking trying to send a transaction during this process, because almost certainly Infura or somebody's going to go down, Cloudflare, whoever's running nodes is going to have trouble. Lido, validators, right? Who knows? There's just so many different possibilities. Again, I think ETH, the security is going to be fine. It's just everything that touches it might have some trouble. You're going to see some issues processing transactions. If I had to guess, exchanges are going to require additional confirmations on the blockchain. And that may be extending it from 10 minutes to 12 hours, right? You just don't know. Because again, something this big has never been attempted before. There's a massive effective bounty to mess things up for a lot of people. So just have a plan, right? If your plan is, I'm going to put it on a hardware wallet, it's going to be fine, it's going to be off the exchanges, I'm not going to touch any of this stuff as it's happening, that's probably the safest plan. But I definitely wouldn't want to be active in any DeFi loans or anything reliant on an oracle, because if there's a chain split and the oracle's talking to this chain and not that chain, and your loan's on this chain and not that chain, it gets liquidated, and that's it, right? So just be really careful. This is my PSA. Just be careful if you're in DeFi land, and be prepared. If everything's fine and everything goes well, you can say, well, at least I was prepared. And if it doesn't, you can say, at least I was prepared, but you knew it was coming. Security wise, though, I think everything's going to be fine. It's just it's going to get very very weird when this happens, and this is very likely happening towards the end of the month, definitely by next quarter, I'd imagine, and probably by September based on estimates. And here are all the test nets. This isn't even all of them, but they've tested it in different environments. They've sort of stress tested it in different ways. This is probably the best tested ETH fork that ETH has ever seen, which makes sense. It's the most impactful. A lot is riding on this, right? I don't think they will want to roll anything back if something happens, right? But they've done that before, so I wouldn't take that out of the question. It's just lots of moving parts, Just have to be careful what you're doing in the ETH ecosystem while this is happening, or with bridges while this is happening. We just saw Nomad bridge get hacked for, I don't even know how many million, hundreds of millions, 135 million it might have been. Just be careful. Guaranteed shenanigans are going to happen, and just know that it's coming ahead of time. Hopefully all of the exchanges get together and say, look, we're going to have this self-regulatory environment where we're going to clamp down on shenanigans during this time and make sure everything is transitioned smoothly, and then open the doors just as they were before after it all goes down, right? Out of an abundance of caution, that's what I'd imagine everybody would want to do. Something else these exchanges are going to want to do, especially the third tier exchanges, they're going to want to list that ETH contentious hard fork, just like they wanted to list ETC, just like they wanted to list Bitcoin Diamond, right? Any of this nonsense, because it does bring in trading fees, and it does help the market put money on the line and say, okay, if ETH goes to proof of stake, right, and there's this fork, all of a sudden you have 2 coins. So it's an airdrop effectively. So if you have a bunch of ETH, now you have a bunch of ETH POW, and if you want to sell that, you can, right? Which is what many people did when it happened with Bitcoin and Bitcoin Cash back in the day. So it's not necessarily a bad thing that it's listed. It's just, it tends to linger longer if it's listed on an exchange, because you'll see a bunch of activity pick up as it happens, and then slowly over time, volume goes to zero, and it may or may not end up on the exchange. And I'm just running through this in my head because that's what happened with all these Bitcoin forks. The other part of this is many people are getting bullish on ETH, or were getting bullish on ETH, with the assumption that ETH would move to a deflationary environment based on the burn of transaction fees. So this is ultrasound, not money. That's the name of the website if you want to play around with this. But we can look at the number of ETH being staked. It's, I think, around 15 million based on the website's estimate. The more ETH that's staked, the higher the issuance. Okay, so we're at 15 million. The higher the fees, the higher the burn, and we're somewhere in the mid-20s. And the merge date's adjustable as well, but that's probably going to be no later than end of September, assuming everything goes right on the last few testnets here. So if fees stay low, and largely this is based on on-chain activity, but if fees stay low, ETH will not be deflationary, most likely. Now, if fees pick up, you can see how the supply peak gets set at the merge date effectively, and the circulating supply then gets eaten away because issuance is less than the fee burn. Now, if fees are higher, that is a worse user experience, right? Nobody wants to pay high fees, and that's where scaling comes in. But there's lots of levers here with supply and demand, and if demand goes up, supply should go down. If demand stays low like it is now for block space for on-chain activity, then ETH will not likely be deflationary, as was expected. And Andrew Kang sort of broke this down in a tweet and looked at it, but we can look at this and you can just see the daily ETH burn continues to decline because fees are low, which is good from a user perspective, but from a sort of buy and hold expectation of deflationary conditions, that may have to be adjusted a little bit. Assuming demand stays low, right? If demand starts to increase, then you will see that deflationary environment. And while we're on the topic of ETH, hash rate as well. Now hash rate's going to go to zero, right, with the proof of work, proof of stake transition. Some of those miners have already taken off their hash rate. Some of this is price related as well. But this is all going to zero, so it either stops mining or goes to another chain, potentially ETC, Ethereum Classic, or any other chain that you can mine GPUs with, because that's what is being used to mine ETH currently. Most of it anyway. And something else we can look at in the GPU sense is we can look at GPU cost. So this is PCPartPicker.com, tracking GPU prices. I feel like I'm a commodity trader or something looking at stuff like this, but this was the historic GPU price. This is like the highest end GPU at the time. So last year we had chip shortage, we had ETH transaction fees sky high, miners were just minting money hand over fist, right? No longer the case now. Mining profitability for ETH has plummeted because, again, transaction fees came way down. So now what the GPU market is pricing in is it's pricing in effectively that ETH merge is going to happen sooner rather than later. The lines here represent prices for this GPU, which are currently well below MSRP now, whereas previously they were 4x this price almost. So that just shows you that the GPU demand has fallen significantly because the expectation for profitability or return on investment for these GPUs has plummeted as well, right? So it's a good way to get a sanity check of the market's expectations just broadly as far as what's going on. More interesting things happening with ETH over the past week. There was a massive spike in active addresses on ETH as well as transactions. So this is in the on-chain activity realm. And the first question I always have is, okay, is this some spam attack? Is this some DDoS, denial of service attack? Is this some mixer with on-chain activity? Is this some DeFi project, right? Whatever chain it is. So first I look at multiple websites because sometimes it's just the website. Sometimes the nodes are messed up and not updating properly. So this is Glassnode specifically, but you can also look on Etherscan. They have all this data as well. And it's like, okay, well, it's on Etherscan, so it must be real. And like I said, transactions also rising significantly to all-time highs. And this is one reason why I look at on-chain activity really on a weekly average, more so than just raw daily, because there's a lot of noise in those daily numbers. And ETH active addresses were already rising. So it's good to see rising on-chain activity with rising prices. That's what you want to see. You want to see a fundamental reason why, based on usage and demand, prices are rising, other than just speculation, right? Based on speculation, prices can go anywhere they want. But when there's that fundamental component of either massive increase in demand or massive decrease in demand for on-chain activity, that almost always shows up in price. So the question was, okay, what is this? What's going on? And then I go to the data providers like Coinmetrics or Glassnode to see what they have to say, right? And as Kyle Waters is illustrating here, he's asking the kind of questions I was asking, right? What is this exactly? What's going on? And just to show you how deep we can look at this from an on-chain perspective, we can look at sending and receiving addresses. We can see, okay, most of these were sending addresses that were rising rapidly, not receiving addresses. Most of these were small transfers, not large transfers. And then we can go block by block and see, okay, where exactly at the time points was this massive spike. Sometimes this points to things like mixers or attacks on a chain. You'll see it more often in much smaller chains where they tend to be feeless and they do these stress testing things. Dash is one of them that I've seen this on. Waves, I think, historically. But anyway, you'll see this time to time. It'll mess up the on-chain transaction chart forever, but it'll show you basically their maximum transaction per second numbers. Anyway, so Kyle is looking at this further, saying, okay, we can see it's all right here. We can see that it basically spiked for Binance specifically. So what this probably was is Binance sweeping addresses or aggregating addresses or cleaning up the loose change in your couch effectively is what they're doing, where they are probably getting ready for the ETH merge or something thereabouts, where a custodian is moving a bunch of ETH from wallet to wallet, right? I think that's the effective conclusion here, is that this is Binance's in-house transactions, most likely. So it's always good to just investigate what's going on. And speaking of investigating what's going on, if we look at Avalanche, this is Avalanche's daily transaction count. I had that same issue this week because massive increase in transactions, right? We look at active addresses. According to this website, active addresses not rising that much. Gas usage, this is transaction costs basically rising pretty significantly. So the question is, okay, is this real? It should be real. This is AVAX's official website. AVAX has multiple chains. So what I think is going on here is, if we look at the C chain versus the X chain versus the P chain, I think what this website is doing is aggregating all of the transactions on side chains as well as the main chain, the C chain. But again, you have to know that in order to understand what's going on here. They don't necessarily tell you that outright, but I, again, assume that's what's going on here. They finally aggregated data across all chains versus just the C chain. And just to be sure, I always look at active addresses as well. This is Snowtrace. This is Etherscan clone equivalent for AVAX. But again, just to give you a flavor of on-chain activity from chain to chain, you do have to sort of know the underlying architecture of the chain to really get the nuances some of the times. So it is real. Activity has picked up on AVAX collectively outside of just the C chain. Flipping gears back to Bitcoin. Bitcoin's active addresses on a 7-day basis still basically flat, slightly down. We can look at things like monthly average as well. Certainly downtrending, right? And that matches price. There's no mismatch here necessarily. We're not seeing a rapid rise or fall in on-chain activity relative to price. So that's sort of what you'd expect. There's no divergence there. If you look at transactions per day also trending down largely on a weekly basis, on a monthly basis. Again, nothing out of the ordinary there. Sometimes on-chain activity does lead price. One very specific example is 2018, where we saw continuous rise in transactions per day on-chain relative to price, which was flat. Now, this ended up being not an attack, not nefarious activity, but one specific application, let's say, on top of Bitcoin at that time, which certainly made the on-chain activity look better than it was. But again, as always, it's worth investigating. If on-chain activity is rising and price is not, that usually tells you something is going on underneath the hood. Or there's just a general divergence between price and on-chain activity, and you can take action on that accordingly. But as we said here, nothing out of the ordinary for BTC. Bitcoin's hash rate is pretty volatile up here. It is down from all-time highs, certainly up from the July low when the Chinese miner exodus happened. But a lot of what happened after the Chinese miners left the scene is sort of responsible for this hash rate volatility here. So what we have is miners in Texas who built up farms when this transition happened because they saw the opportunity based on cost, based on land availability, real estate, overhead. But now they're dealing with grid stability concerns because of heat in Texas. So I think what we're seeing here, if we just do no average, because these miners have the ability to turn their entire farm on and off at the flip of a switch, they're either curtailing much of their power during the day or during peak hours and turning it on at night, or they're just leaving it off for an extended period of time. But you can see the volatility just on a day-to-day basis relative to even historically, right? I mean, this is, I don't have a measure or a metric for this, but this is pretty volatile. The hash rate isn't a perfect signal anyway. It's kind of a guesstimate as to what's going on, but I think that's what we're seeing here. And that's why we're seeing hash rate trend down as price comes down as well. Profitability is lower, certainly. And then lastly, for the on-chain metrics for Bitcoin, if you look at Bitcoin's layer 2 scaling initiative Lightning, much like a debit card system, where in order to enter this side chain, this layer 2, you have to present and lock up BTC. And we're seeing a continual rise in effectively one way to measure participation in this ecosystem is BTC sitting in that ecosystem. So we can measure that, and that's continuing to rise, hitting all-time highs kind of day over day here, regardless of price. Price is falling, Lightning Network capacity is rising. Definitely a divergence on that front. As far as the circulating supply relative, it is small compared to circulating supply. We're talking about 4,000 coins plus, just under that. They're just under 4,500 coins. There's around 19 million circulating. So not much now, certainly, but worth looking at and following if this thing continues to grow. One other thing I'll mention about Lightning is the transactions that happen on Lightning do not show up on those on-chain activity measurements for Bitcoin that I showed earlier. So it's going to get harder and harder. I say this every video, I know, but it's going to get harder and harder to really understand what's going on if much of this activity moves to layer 2, if layer 1 is where the big transactions happen and the important transactions happen, whereas layer 2 is more like, buying a coffee or buying groceries effectively with like a debit card, right? We're talking a debit card versus a wire, a debit card versus a money order, a debit card versus a remittance, right? Or a credit card versus any of those things. That's effectively the comparison when we're talking about layer 1 versus layer 2 here for Bitcoin. Flipping gears to technicals, Bitcoin's really been held within this, it's called the power law corridor, effectively just line of best fit. There's a regression in here, some other fun stuff, but this isn't adjusted continuously. It has been adjusted over time. So it's a line of best fit, right? It's not perfect. It's not meant to be, but it does give you some idea of overbought, oversold conditions. So there's that, right? This is telling me, look, we're closer to the oversold levels than we are to the overbought levels, certainly. Something else I put on here was the 200-week moving average or the 1400-day moving average. Historically, again, we don't have 500 years of data here, but we do have data since 2014, and it is showing price at those levels where historically we've seen accumulation, right? It may take 3 months, may take 6 months, may take a year. Historically, this has been a very important level for price, looking back on what's happened in 2019, in 2015. And I really like that even during the COVID low, even during this hyper volatile black swan, that's where price effectively found a low, and the rest is history, right? We had this massive run from there. So the past doesn't predict the future. This isn't investment advice, all the usual stuff. But this is a very, very important level historically for Bitcoin, for Ethereum, for any coin that has enough trading activity historically to even look at this level. Not many coins do, but ETH does as well. And we're definitely at those lows. On a nearer term basis, I'm laser focused really on this chart, which is a combination of moving averages, previous all-time high levels, VPVR, which is volume at price, and a few chart patterns mixed in here, right? This is kind of the potpourri, the cornucopia of everything that's going on. And my read here is, again, we're at these important levels historically. It's important to know with evidence, right? Okay, pick an MA, pick anything you want. Does it hold up over time? The 200 week has been the best that's held up over time. The second thing that's really held up over time well is previous all-time highs. We typically don't retest all-time highs. We typically don't go lower than all-time highs. And when I say typically, I mean ever. We've never fallen below previous all-time highs. I mean, hence why the power law corridor is up and to the right and not, it's not a rainbow. It's not pointing down ever. It is a continuous march up and to the right. So depending on how you want to think about that, all that makes sense, understanding that that's been the trajectory so far, obviously no guarantee in the future. So we've got these MAs, we've got this mean reversion target at the 200-day moving average, which just like Legacy and TradFi is incredibly important for crypto TA, just baseline litmus test. Are we bullish? Are we bearish? Where's the mean, right? The same effectively as TradFi. That's currently around 33, 34K. We're still stuck within this downtrending channel, and we've got this nice gap of volume based on VPVR, where one possibility would be to jump from gap to gap, because the read here is, well, there's not a lot of overhead supply in the way. There's not a lot of resistance here until at least 29. And then we're talking about getting back into the previous range, which is why there's so much volume here. But we are still bearish. We are at historic price levels that have been important. And we are even in this near-term downward channel. So if we are going to mean revert, first we need to get out of this channel on a technical basis. We're not there yet. We're getting there slowly. We're inching our way there. But the expectation for me certainly is to return to this previous accumulation period and essentially return to the previous 30 to 60K range. Now, we're not going to pop to 60 in a month, most likely, right? But the first step is to start testing the ceiling at 30. So I do like where Bitcoin is sitting here based on technicals. And if all this is wrong, right, it won't break through this pitchfork. It'll continue its march downward. It'll continue to mean revert to this trend line. And we will likely need to break lows with strength because 20K and BTC and 1K for ETH are incredible psychological supports at this point in time. Meaning that's where people put their bids, their round even numbers. We see a lot of activity in those levels generally. So here's the ETH version. Same concept. ETH has returned to its previous accumulation zone, whereas Bitcoin has not. ETH has a flatter volume profile here, but the target for ETH, as far as upside, mean reversion is 2200. So both of these have some time, but they do look decently okay on balance over the next couple months. Now, add in the ETH transition into all this, right? And things can get extremely volatile price-wise. So you got to keep that in mind. You have to know when that's happening, especially if you're levered up. Be careful, right? Just have a plan. As I tell people, have a plan. Like I told people with Terra and UST, right? That was flashing warning signs for a long time. Have a plan. Now, ETH again. ETH is going to be fine. I think security is going to be fine. DeFi, I'm kind of concerned that some crazy things can happen immediately after the transition. But as long as you personally, if you're in this environment, have a plan, that's the most important thing. But as we sit here today, technicals look ready for continuous mean reversion to the 200-day moving average. Lastly, I'll just mention the DXY, which continue to watch here. Historically, it's been held within this range from 2015 to current year. And it had this parabolic move to the upside. This is ETH-like. This is crypto-like. This is not something you typically see in FX, Forex, at least in my experience. But BTC digital assets tend to do best when DXY is weakening, not strengthening. So that's something else to add on to this whole setup of mean reversion and potential bullishness for Q4 is, can the Dixie settle down? Can ETH make it through the fork okay without kind of destroying everything, bull in the China shop style, and away we go, right? But I think that's going to be a critical time point in the next couple months. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.